Hello, this is Steve Malone with ComsFX. I hope you're doing well today and you're getting some good trades. Over the last number of days, there's been a lot of talk about the dollar-yen going higher. There's a lot of positioning in the marketplace as many institutions are bid-tone on the dollar-yen. Well, why is that? Well, if you take a look at the weekly chart, there is a bullish pennant pattern. If you don't see it, let me draw it out for you. From the high to the low down here, this is what we refer to as our flagpole. Now the pennant flag is made up of lower highs and higher lows. This particular pattern is known as a bullish pennant pattern, and we expect the market to push higher. Now what we have to do is consider for a moment, where is the dollar yen going if we break higher? So we got to consider our targets. So one of the things I'm going to do in this video is to consider the targets as to where we go on a break. Also, let's consider some of the fundamentals and technicals in the marketplace. And let's also consider what may keep the dollar yen from pushing higher. If you simply look at the fundamentals in the marketplace, you got to look at the Bank of Japan. They're a pretty big player in the marketplace when it comes to the Japanese yen. Last year, there was a push by the BOJ along with Prime Minister Abe to weaken the yen in the marketplace. And that caused the dollar yen to rise through the latter half of 2012 and into the first half of 2013. Pretty big push to the upside. Now, why would the Bank of Japan want a weaker yen? It goes back to the basics of the Japanese economy. Japan doesn't have a lot of natural resources. They depend heavily on their manufacturing base. And if they can manufacture goods and at a fairly low price in comparison to other world currencies, then they have more people buying Japanese goods. So if the yen is much lower in value compared to the dollar, or much lower in value compared to the Aussie dollar, the Kiwi dollar, the euro, or the British sterling, then there's the chance that their economy improves. Well, that's the idea. So from a fundamental perspective, the Bank of Japan likes to have a weaker yen. A weaker Japanese yen means the dollar yen rises higher. Now when we take a look at this from just the weekly perspective, one of the things I pointed out when you take a look at the Traders Dynamic Index, this represents the sentiment in the marketplace compared to price action. Now one of the things I've noted is when we see that price action is rising, see it's rising right here, but sentiment is falling, then we expect to see price come back. And we expect it to come back in unison to some extent to that which we see in the Traders Dynamic Index. The Traders Dynamic Index gets up here pretty high, almost to 100. Here it's at about 96, and then it falls all the way back down towards the 50. The market baseline hasn't reached back to this level. 50 is kind of a neutral level. Now here's the thought. If we don't see price push as far back as we see the Traders Dynamic Index, then I expect continuation to the upside. So what we see here is a bullish price pattern matched to market sentiment that's getting back to neutral. If this gets back all the way to neutral or close to it and price starts pushing back up higher, then we're going to see sentiment try to push higher as well, and then we get price sentiment moving the same direction, moves higher. Now let's step in and take a closer inspection of the pennant on the daily chart. Now typically when we look at a pennant type pattern like this, we start to take what we call a measured move. Sometimes that measured move is from one side to the other side when it comes across. And that's a pretty big move right there to see the market go from one side to the other. Some folks will go in about halfway and measure about the halfway distance from one side to the other. Others will go in a little bit deeper into the pennant or into the triangle. Whichever one you take, the idea is that we're looking for the market to break. When the market breaks, then we take that measured move and we set it outside to see how far the potential of this could go. So far from that hit to this bottom, that could potentially see us move up somewhere in the neighborhood of about 103.50. Well, that puts us back at the high. Okay? The high of the start of the flag. Now, in the event that the market pushes up even higher on a potential break, let's say in the same area right here, we could possibly see this push all the way back up in the area of 107. Now, that's not going to happen anytime soon. This is, how many days did it take to go through this pennant pattern? This goes all the way back to May. So going into 2014, if we have continued weakness seen in the yen and the dollar starts turning, becomes a bit more bullish in the marketplace, let's say the Fed starts doing a bit of tapering, we could see this potentially move higher. Now, before we get too crazy about all this, let's bring it back down just a little bit and start considering really where could we see this go in the next coming days or so. One of the things I like to do is take my fib retracement tool, run it in reverse, look for the market to go to about a 127.2 or 141.4 and the 1618. So if I simply take that fib retracement tool from the last swing high to the last swing low, we can see, if I zoom in just a bit here, we can see that the 127.2 sits around 99.55. Then 141 sits at 99.85, and then we eventually get up here to about the 100.25 level. Now currently in the marketplace there are offers at 99, but there's a lot of buy stops above 99 to see the market push up towards the 100 level. So my thinking is this: if we can break through this trend line, which sits right at about the 99 level, and continue pushing higher, then we can test the 99.50, may get a bounce off the 99.50, and then a push higher to 99.85. The eventual place the market is looking to go is 100. So here's my thought: as we trade actively intraday, look for the potential move to 99. Look for the rejection of 99 because of current offers sitting up in this area. Also be aware that the market could possibly go up, trigger longs, bring it right back down about the midpoint of the pennant to stop them out, and then push back higher. Why do I say that? Let me ask you. Have you ever been in a position, the market goes against you, stops you out, then turns around and goes back in the direction that you knew it was going to go? Well, that's just part of how the market plays. It goes after stops, it goes after the easy money before it continues making its long move. So just be aware of that. Now, there's still some in the marketplace that are looking for the dollar yen to push back down to 98 and possibly even come down closer to this area back towards the 97.50 area. Now, why is that? We have to go over and take a look at the euro yen. The euro yen is in this upward channel, but you need to step out and take a look at the bigger picture to see what's going on here. If I zoom out a little bit, you can see that this has had a tremendous move up since the mid of 2012, and this right here is a continuation. The way that I look at it is kind of that institutional grind, higher and higher and higher. However, look down below. We can see that in this case, this is pushing up. The highs are not getting any higher. The lows are getting higher, but the highs are not necessarily getting higher. So there's a possibility that we could start running into some potential divergence. Now let's take a look at this a little bit closer in, and let me lay some levels on. The high point that we got it to was 135.50. Now this is not pushed all the way up to the top of the trend line here, which currently, if this were to move up, puts us somewhere in the ballpark of 136.80 to 137 level. The market can't seem to get back up in this area, can't get back up to 35. If we've dropped 300 pips, then there's a possibility that this gets tested lower. So what I'm watching for is I'm watching this trend line. You see there's a trend line here in my Traders Dynamic Index, and guess what's just taken place? It's just broken the trend line. Now we may just be a little dip below and a bounce back up, but we have the red line coming down. We have the market baseline starting to turn over. There is a possibility that we could get a slide down in the euro yen. If we get a slide down the euro yen, which could be simply just weakness on the euro, but it would cause the dollar yen possibly not to push up any higher, as we see folks coming out of euro yen longs, going into euro yen shorts. That would be strength in the yen, the opposite direction that folks are looking for the dollar yen to push up. So again, if the euro yen continues this downward push, it could possibly go down to 131, 129.65. A current floor for the euro yen is 128. So as you trade, just be aware that most traders in the marketplace are looking for a push up. The midpoint of this pennant pattern right now sits somewhere in the ballpark of about 98.13, 98.10. Currently, between the top of the trend line to the bottom of the trend line, we sit somewhere right in this ballpark about 98.10 or so. That's about the halfway point. Okay? So if we continue going higher, then I expect that the euro yen would bounce off this trend line and push up. However, if in fact there's continued weakness in the euro and the euro yen longs turn to euro yen shorts, or there's profit taking that breaks this trend line here and we push lower, that's going to cause that dollar yen potentially to fade back down and stay inside of this large pennant pattern. So there are my thoughts on the dollar yen. A lot of folks in the marketplace are looking for it to go long, but if it hesitates, check out the euro yen because it could be pulling it down and holding that dollar yen from rising higher. This is Dean Malone with Compass FX. Hope some of this information will help you in your trading. Make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.